Testing, testing. Looks like the screencast is not working here. We need to restart here, I think. See if we can get this screen up. The screen is not adding me here. I don't know why. Can I get myself on the camera? Why am I not coming up? It says add a media source. It's not bringing me onto the camera. There we go. There we go. I finally got it up and running. Let me try this. Showtime on C. Can I, the center is like this, cover. Okay, well that seems to be working. Greetings to everybody on the Weaponized News network here. My background picture is still not coming up properly. Try to get that sorted away here. I'm back again for another meeting for the AOE BAM Fund, Business as a Mission Fund. We'll see if we can get this up here, if possible. If it will work. Try to get the new one up here. I changed the background screen, so we'll try to get that in here. Just running the setup and technical setup. It's my second time ever doing this for this new open venture capital fund. This is the one I made for when I'm on Weaponized News with Sam Cheney. It's got the small icons there, so I fit when I'm side by side with him. So it fits and people can read that. So, but I do like the wider one, so I'll have to make another one for that. We'll go back to the other image, the YWAM image here, on the virtual background for now. Let's go to this one here, a little bit wider there. So I'll make one for that with the AOE BAM Fund on the side. So what I'm doing is I've been working on and now launching a open venture capital fund, open to the world, the world's very first. Even I was joking around in a meeting today with some other venture capital investors, a flagrantly Christian venture capital fund. So the world's first Christian early stage, first check venture capital fund. There isn't one like it anywhere else in the world. I've almost never seen a Christian venture capital fund anywhere in the world before, though there are a couple, I guess you could say in name, or in name only, not to attack them or something like that, but they're not dedicated funds for this purpose. There's no dedicated Christian venture capital fund for the startup business model. Okay, so I'm building that partly for that reason. Also, a huge litany of other purposes and reasons. Currently in the market today, the biggest unmet demand and need for humanity is venture capital investors and venture capital investment and small business finance. We can all see the Trump policy right now, everything that Trump is doing. Some of the things are great, no question. Some of them are very positive economically, positive for America, no question about that. But it's all top down, as everybody is seeing. And there's no trickle. There's no trickle down at all from any of this policy that you can see. So what Trump really needs to do, and what all of these so-called government representatives, right, as if they're representing any of us, but what they need to do is start to finance the small businesses, finance the startups, finance the innovators, and they're not doing that. They're financing only the top, the biggest, richest corporations in these mega deals in human history in these different countries, right? And meanwhile, we have 50 million new founders worldwide that are going into business, starting new businesses. So some people call just starting any business, a startup, that is not the startup business model, which is separate from that. I'll have to make a slide about that. Let me crack some notes here. Keep some notes for myself for what I'll need to make for slides to show and explain this to people. Slides to make a simple difference between business registrations and startup business model. I do have a slide for that on my presentation. I'll look for that. We'll try to pull that up. So what the startup business model is you or your friends and family, somebody comes up with a business idea, right? And then you plan this out meticulously every single step of the way. You itemize everything, you cost this out. Similar to if you're going to build a new McDonald's franchise, you've got this new idea for a great new franchise of some kind, be it, you know, some new mechanic shop, some new phone store, some new fast food place, whatever it is. And you meticulously plan all of this out, every possible aspect of this. You go study your top 50 competitors and everything that they're doing in business. Collect all of their business plans, all of their products, all of their pricing, all of their strategies, all of their marketing, all their social media, all of everything. And you put all of this plan on paper, meticulous planning. You cost out every single item that you're going to need to construct this, every single dollar. Let me change my lighting for a second. I'll be right back. Just going to change the lighting here a little bit. There we go. I'm not glowing like an alien from Venus or something like that. Okay. So you plan out every aspect of this business, make your business plan, your pitch decks, your everything. And what is that? That's my, okay. I opened up also a Google Meet. If anybody wants to come in the Google Meet, I'm going to put this into the chat. Let me open the chat up. Where's my chat? Somebody's joining the chat already on the Weaponized News International Network. Here's the Google Meet. So what we're going to be doing is twice a week, I'm opening up this venture capital fund, which I'm just beginning to build. And I'm building in the raw, building in the public as we go. Been working very hard on the website for it and opening up the different social medias and making some material, getting everything together. Probably I'll be done the website in another week from now and the social medias, etc. And then I'm going to start aggressively advertising for people to join everywhere possible and across social media in job listing sites and these kind of things. And I have it right here. So here's my chat. Here's my, okay, good. And then we're going to get a bunch of people together to come into a Google Meet twice a week, once a week or twice a week. And we're going to educate these people and make basically an investment club, angel investing investment club for people to learn. It's completely free. Nobody needs any money to join. You can come along and you can learn everything that there is to know about angel investing, startup investing, and getting into VC. Get into VC. VC, for those who don't know, is venture capital, the venture capital industry. And the venture capitalists are the people who they invest money into startups, and then startups grow. Okay, let me. Yes, here. Let me go over this. Let me show this. Maybe it's a little bit cluttery for people. I need to simplify it down. Sometimes it looks great to myself until I go to actually start teaching the people, and then I realize there's just too much information here. I need to simplify this for the layman a little bit more. So this is like a basic plan for venture capital and constructing a business, and the difference between the startup business model and small business as usual. Okay, let me come out of there just for a second, talk a little bit more before I get into that. So of course, if somebody's just going to start a business, an organic business, a lemonade stand, right, and they can start this for $20 or a couple $100. That's just small business as usual. That's an organic business. Okay, and there's a complete and total difference between the organic business model and the startup business model. They're not the same. Okay, and for 6,000 years before, we had the Startup business model as usual, SPAU, SBAU, startup business as usual, right? Or small businesses as usual, sorry, not the word startup. The word startup is not involved in there. So people might, if you're a little bit older, you might remember, or at least remember the talk of history. You might have been educated properly, right? The talk of history prior to, the 1990s, late 1990s, or even 2000s era. Nobody said anything about startup. The startup business model. That term did not exist. I don't know exactly when it first came around. I'll have to do a search for that. But probably it was in the late 90s to somewhere in the 2000s. And before that, there was no term, startup business. Okay, if you're starting a business, that was starting a business. And generally people would have thought of that as organic. Nobody would have thought of, okay, I'm going to start a business and I'm going to make an incredibly meticulous business plan, and then I'm going to go pitch to investors and raise several $1 million and then construct this. That was not the model. Now, some people still did that. Sure. I mean, that still happened, but it was incredibly rare. Not like today where, 55,000 startups have been funded in America, in the world, right? Which is the data on Grok. They say 55,000 startups have been funded. It's an incredibly small number. Sounds like a lot, but it's really not a big number at all. And it's way too small. We need like 10 million or 15 million or 17 million funded worldwide every single year. That's the money we need funded, and we only have 55,000 funded. So this is the biggest demand industry in the world is money, actually, money, the money industry. And we always hear these people talking about we need to stop printing money. We need the Fed to stop printing. And there's been endless amounts of propaganda in that regard forever on that topic. There's more propaganda than ever. In fact, on my X account right now, there's got several trolls telling me to watch some fake Rothschild central banking propaganda documentaries for 3 hours, laying out their massive subversion and fraud. I mean, it doesn't matter what the topic is. You can go onto YouTube, you can go onto any of these different video platforms, and you can find documentaries of 3 hours of propaganda on the extreme left, on the extreme right, on the center left, on the center right. It's sort of maybe in the middle somewhere, and all kinds of other in between. That does not mean that they're factual, right? So everybody experiences these trolls and how annoying that they are with their opinion pieces, and they all think they read some talking points that were fed to them by the propaganda institutes, either hard right, and now because they've memorized maybe 10 or 20 things, finally, after 3 years of trying, they memorize these and they can repeat them, so they feel smarter than everybody else, and they like to use these talking points to make themselves feel important or something like this. But actually, they have no idea what the hell they're talking about with these kind of things. And most people don't know what they're talking about when it comes to printing money and the Federal Reserve and how all that works. Okay, and they close their minds and they don't even want to be open-minded about this and actually have an intellectual discussion about these topics. But I think everybody knows, especially right now in today's economy, small businesses are hurting, right? The average American consumer is hurting. Something like 62 or 64 or 66% of Americans are 2 weeks away from bankruptcy. If they don't get their next paycheck in 2 weeks, I mean, it's game over. They pretty much got to sell their house and get out and sell a bunch of stuff, right? And the credit card debt is going up and so on. Everybody needs money. You need cash. You can't live on, like, if they started decreasing the amount of cash in the system radically, that's not going to help. It's going to make money way more scarce. And then, right, that's going to be a serious problem for the economy. There's going to be no job creation and everybody's going to go out of business. We need enough printing in the system. We need money in the system. And money needs to be available, particularly to small businesses, innovators, startups, small factories, manufacturing, in order to grow the manufacturing sector. So money and finance, particularly business finance, and particularly small business and manufacturing finance, is the #1 crisis vacuum demand product and service in the world right now. So if anybody out there is looking for a new business to go into, there couldn't be a better time in all of human history to get into business lending, small business investing, right? Making venture capital funds, get into VC, get together with a bunch of people, right? Join our fund. to join together with us and start coming to our meetings and start learning about this, right? And I would like people to get engaged, not just to watch me on this broadcast, but actually to get engaged, join our Google meetings, and this will transition over time, because in the beginning I'm doing a presentation, I'm talking, because I'm focusing most of my time building the website, building out the, the materials and everything that needs to be done for this, and the marketing, some of the domain setup, the social media and internet domain setup, everything. And then I'm going to do some aggressive marketing to bring in a bunch of people, and we're going to live stream open these discussions, right? Just like having a big Zoom call. But instead of having the big Zoom call, we're also going to live stream it across many social media on the Weaponized News International Network. Like this is what we're going to do as well. So it'll be totally open, totally transparent, totally accountable to the world. And everybody can come in, they can ask their questions. What are we going to do with the fund? How does this work? How does that work? And startup founders can come in and they can ask questions, and we'll give them advice. We'll help them. And we want to get a team together of about 30 active regular members that are going to become part of our venture capital fund. So they're all going to be members of the fund. And the top people in the fund, right, if they're contributing enough and they're there on a committed regular basis, and they really become part of this active team to build this out, they can be rewarded. They can earn shares in the startups that we invest in, and they can earn shares in the venture capital fund. They can become a part owner of this. So we welcome you to join, everybody who hears about this. And if you can, please, if you know anybody in the financial industry, in accounting, in financial planning, selling investments, any stockbrokers, investment bankers, insurance agents, real estate people, anybody like this that's involved in loans, mortgages, insurance, whatever, please refer them to us. Refer them to me. Let me put up my contacts here. And I would love to talk to them. We'd love to get those kind of people involved as well. And they'll be the active people that I'm soliciting. Well, I'll be soliciting all those people I just mentioned in the financial industry. And I will be soliciting angel investors, angel syndicates, family offices, and so on. Probably I will not go after any venture capital investors, because we're building a VC fund, and those guys are just inundated with endless amounts of spam from, billions of founders, effectively these 50 million unfunded founders every year. So I don't expect that we would get much of any result there. So I'm not even going to bother with that. But I'm going to go after the financial industry people pretty strongly, regularly, after we get this built out in the next 1 week to 1.5 weeks. And then I'm going to set up advertising basically on the different job websites and whatnot, and people can come in off of that. That'll generate a bunch of traffic. And then I'm going to actively be going after all of these financial industry participants to try to find people to join. You don't need nobody needs any kind of special background to join the AOE BAM fund. So I have up here, okay, that way it's backwards from my from my flip. The YWAM BAM fund. YWAM is a Youth with a Mission. It's a Christian organization. We're not officially affiliated with them in any regard. My original idea was maybe I'll team up with some Christian organization or something like that to fund Christian founders. How do I find the Christian founders? I could reach out to the churches, and then for some reason, YWAM popped in my mind. I thought, wow, that'd be awesome. We can bring in some apprentices. But I thought that people were younger than actually they are. Generally, they're 25 years old to 35 years old is the 18 to 33, but mostly 25 to 35 is the ages of the YWAM participants that go through their 9-month intensive course on teaching the gospel and going out and doing missionary work around the world in these emerging markets. Really incredible. They have 18,000 volunteer staff in 180 countries, and they've been doing this for decades. So I'm very happy to hear that. So I'm hoping to integrate more with them in the future, but we're not doing anything officially approved by them. I went to their office, their headquarters office here in Cambodia, and they think it's a really cool idea. They really like what I'm doing, but we're just beginning the relationship there, and they don't really know me from Adam yet. So good intentions I have, but they don't know. Oh, who's this startup guy? What's he doing? Who knows? These days, some blockchain. Maybe we need to ask him not to use YWAM yet. Let's check him out. Let's let him build some track record in this first. So I started thinking about that, and I thought, that's a good idea. Probably I need to change the name. So I've now changed the name to AOE BAM Fund, so Alpha Omega Energy Businesses Emission Fund. I hope in the future we can somehow integrate with YWAM. They have this huge organization. It would be so cool to have them, or build something really successful, and then convince them to copy it across their 180 countries, and make startup funds for all of these Christians everywhere. That'd be amazing to achieve something like that, even if they just copy us and we get nothing. I mean, I'd be thrilled with that as part of your personal life legacy mission to make some great impact in the world. I would be thrilled with that. But maybe they need us to help them after a while to do it after we build the first successful one and then teach them how to copy it. That'd be great too. I would love to do that. And if maybe they'll call it the YWAM BAM Fund, maybe they'll call it something else. I don't know. Maybe we will help to co-manage that or co-select the investments or something. Maybe we will just have a successful fund and we will pile on to some of those investments. I don't know exactly what the future holds, but for now, we're just going to call it the AOE BAM Fund, just out of respect for their organization, so that they don't feel uncomfortable and there's no uncomfort there. But that is something that I would love to do. And earlier today, I met with a couple seasoned business people, and they're building something really great that is going to build massive numbers of organized people in solving some of the pressing needs in the job market, which is an absolute mess right now. The job numbers just came out, and they're revised downward, like 250,000 jobs. So for the last quarter, the summer quarter, right, June, July, August, there's only like 30,000 more jobs that have been created in America. It's like almost nothing. It's almost nothing. And there's been job losses here and there that aren't accounted for, that don't get reported to the government, right? Many of them. So we basically have the summer of no jobs right now, with 4.2% unemployment, they're saying in the data. But that's more like maybe a 6% unemployment rate, really, maybe 6.2%, because the costs of everything are so much higher. People have to work way much more now than to just 5 years ago, before the fraud bid. Cost rises went up under the Joe Biden administration. So having a 4.2% unemployment rate today is really like having a 6% of, people are really desperate. They need to work much more than before, right? People with families could get, they'd be okay. They could survive at average American 6% unemployment rate. It takes 4.2% to survive just as many people as a 6%. So it's the job market is horrific right now, and many people, more people than ever before, are applying for the few jobs that are out there. And we're hearing that from employers and seeing posts around the startup market for that. So I met with this guy today. He's building a solution for that, which is really fantastic. And probably I reached out to him today and asked for a meeting, and we might be able to partner something there as well. And that would be absolutely huge, because what he's building is going to be massive in solving some of these issues. And probably we can pull a bunch of members from there and then scale what we're building many times. So our idea is to make a first fund, make that fund incredibly successful, make it one of the top 10% in performance venture capital funds in the world. So there is a standard of what is a top 10%, a 10 percentile performance fund. What is that? How much performance is that over the window? And we need to build that. So the first fund that we build needs to be much more secure and lock down that success and that success record. That is very, very important. And then after that, it'll be easier and easier to raise capital, because we have the track record. But if you don't do as well in the first fund, nobody's going to give you money for a second one, right? But if you do really well in the first fund, you can raise for a second or third fund, and so on and so on. So getting the first one done and done right is very, very important. So the plan for that must be really meticulous. It must be very well researched, very well thought over. Fortunately, I know a lot about small business building. Alpha Omega Energy, that's is my seventh business. The AOE BAM Fund will, I guess, be my eighth business. They're kind of wrapped in together. I know a lot about building a business from absolutely zero, raising zero capital of organic businesses, and which ends at this one. AOE is the first business I've ever tried to raise for. I did succeed at getting one funding deal, signing one funding deal, which 99.9997% of founders will never get a deal in their entire lifetimes. And that shows you that there's such a massive need for venture capital investors, angel investors, and people to get into this business. It's the biggest need in the world. It is absolutely the biggest need in the world. So if you need a new career, if you need to, some upward mobility in what you're doing, some new opportunity for your future, join us. Get involved in venture capital. It's free. It doesn't cost you any money, just a little bit of your time. So over time, right now, I'm doing these presentations to tell people more about it. And then we have these video recordings, and I can post these on social media, and people can come to learn more about us. And then they see us here, and they learn the times. So we're going to be doing this I'm changing from Tuesday to Wednesday. So Wednesday and Saturday at 10 a.m. Texas time. So that's 11 Eastern, 8 a.m. Pacific. So once in the business day morning on Wednesday, on the weekend morning, Saturday morning. So if somebody can make it in the business day, they can make it. And many of the business people they'll see this broadcast on X or somewhere else like that, on YouTube, on Rumble, Bitchute. So we're streaming to 8 major platforms right now, a simulcast on the Weaponized News International Network. I'm based in Southeast Asia, and I'm a regular technical analyst and co-host on California's Weaponized News. And been doing that for the last 3-4 years regularly. Was on almost every single day for about a year and a half, very, very frequently. Now I'm just once a week on Tuesday nights on Weaponized News, talking about technology, molecular engineering, and everything finance and economics as well. So I've been studying the venture capital industry for quite some time and have a bit of an investment background. So I know the investment business quite well, the finance business, and particularly from the small business and lean startup business, building a marketplace and what is needed there. So now I built out a 160-page business plan, very detailed, for this venture capital fund. And I'm more than convinced, in fact, it's an absolute certainty, that we can beat 90% of venture capital investors with way less risk and with way less money and way less money raised than everybody in this industry. And it's actually a very easy thing to do. It's a very simple thing to do. Some VC might, they might say that that's talking a big game, but actually, very sadly, most VC are doing a very poor job at their job. And it's a massive problem. And here's just a couple things to litmus test that very quickly. Firstly, most of them say, we only invest in 1 out of 1,000 startups that apply. Okay, I mean, that's terrible. If you are even allowing 1,000 startup founders to apply to you, if that's the business model you're running, that is a broken business model. You need to fire yourself, give the money back, get out of the business. There's no excuse for doing that. Venture capital investors, they should already know what's going to succeed or not, and they should not need to have anybody apply actually at all. It should be very easy for them to go out into the market and cherry pick, especially when 99.9997% of founders never get a deal in their lives. There's so much out there in the market that needs funding and can easily be scaled. And the performance requirement to hit the top 10 percentile of venture capital funds is so low, it's literally only about 2.7 to 3 times the money in a 10-year window. So if it's a 3x, 300% return in a 10-year window to be in the top 10 percentile of venture capital investments. Let's look at that for a second. What is that? Okay. We have a McDonald's franchise, just as a simple analogy, a McDonald's franchise. You have the plan for that. You know exactly what it's going to cost. You have the subcontractor, right, the business founder, who has everything itemized. He needs the $1 million to construct it. We give him the $1 million check. He constructs that, right, exactly to the plan. And now you have the first line. It opens up. It's profitable. The profit grows over 18 months, the full amount of profit of what it's going to get for that location. And then you copy that. You raise another $1 million, and you build another second franchise, one. So 1x, a second location, 2x, a third location, 3x. So you have a total of 4 locations that you've constructed in 10 years. And that's all you need to do. And you're just beaten 90% of venture capital investors in the world. That's all that needs to be done. This is not rocket science. You don't need to build a Uber. You don't need to build the next Google. You don't need to build the next Apple. You don't need the next, to figure out which one of the 10,000 fake intelligence apps are going to win over everybody else and dominate. You don't need to do that. And in a world where we have 4 billion people that have no secure access to electricity, no clean drinking water, no sanitation, no electricity to power any of that, no electricity for industry, for jobs, for factories, and where there's no power for the data centers. So they're sucking up all of the water, and now there's no water in all of these cities and communities. When we live in a world like that, if you cannot build this first location of something that the world needs that is going to pay a profit, and then copy that 3 times in 10 years, if you can't do this, if you don't have the capacity to find a founder that's going to construct that, I mean, you are useless. You need to get out of the venture capital industry. You need to fire yourself, give back the money, hand it over to somebody who will do that, because that's what humanity needs. We don't need the 10,000 fake intelligence app. We don't need the 53,000 shitcoin monkey token. We don't need the next fake girlfriend apps on the internet. We don't need the next porn shit token shitcoin thing. Humanity doesn't need any of that crap. We don't need more toys, games, apps, craps, fake reality, fake intelligence, fake relationship, fake economy. We need real economy. And so there's a huge need for venture capital investors that actually have any form of basic common sense, let alone business sense. And I would wager that the average Joe blue collar has way more common sense and way more business sense than most of the venture capital investors do, because they understand this. They understand the basic fundamentals of real business and in building out block units and franchises. But the VCs have this just delusional pie in the sky. So they're taking all of this money. They're piling onto all of these massive silicon Ponzi scams, financial crimes, financial cons from these establishment fraudsters that have all the opportunity in the world, very lazy people, trust fund babies, intelligence agency people, government workers, government intel like executives and this kind of thing, big tech executives, right? Just riding the coattails of everybody else. They never really had to go and actually build anything. They're not self-made. Only 7% of venture capital investors are actually operators. Went and built went and built an actual business, right, from the ground up into something. Only 7% of them ever did that. And yet they're funding startups. I mean, it's just, they're the wrong people to be doing this. So we need more people in the venture capital. The world needs 6 million more venture capital funds. The average venture capital fund has between 5 staff to 20 staff inside of it. So if we need 6 million funds times 20 staff each, that's 120 million new jobs at least need to go into this industry. And in fact, it needs to go into this industry effectively almost, it's like every 2 years. We need another 120 million jobs in that industry. 120 million jobs, right? There's only 150 million active workers supposedly in the American workforce. So this is a huge source of where the governments could be generating all the jobs for humanity, and they're not doing it. They're not doing it, and they're not going to do it. And that's another reason I got so frustrated that I felt that I'm forced to do this. It's just so maddening to see this. that I felt I had no choice anymore. I just got to do it. I just got to pull the trigger. I'm going to build a fund because it's just insane. Uh, we don't have the financial backers for a fund. We don't have $50 million. We don't have $5 million. We don't have the funds for the fund yet. So we need to put this together and then collectively in a team build a community, and then from that community and the plan of what we're doing, we'll raise funds step by step in a non-traditional manner. The traditional way is some, maybe one exited founder or somebody with a, this rich elites, top 1%ers, Ivy Leaguers, government establishment or corporate establishment people. They'll go make a fun thesis and go pitch to their network, and they'll raise a $50 million fund or $15 million or whatever. They'll do that in that way first. They're not going to go build a community first and get a bunch of people together. That's not what happens. I've never heard of that before. But we don't have the funding, and also the governments, they need to start building this industry in an inclusive way. The venture capital industry is a very exclusionist industry. It's very hard to even talk to any of these people. Most of them are very antisocial. They're not, when you send them messages, you send them emails, they're not going to talk to the founders even. They say that, oh, we're looking for the founders. Most of them, they never talk to founders. They don't want to talk to founders. They're not meeting with founders. They're only meeting with select people in select particular environments. Maybe some of these, startup venues, okay, they're on the stage first. All they built, like the company's already finished, it's already profiting. They don't even need these VC anymore. And then maybe the VC want to talk to them. Like it's not an approachable industry. It's all of these establishment, super successful, already elite people. And it's very hard to get into the industry. There's so many people endlessly asking, how do I get into VC? How do I get into VC? And countless numbers of people applying to work for free as interns for venture capital investment companies. And they're right by the thousands and just getting rejected, just like interns at other jobs. They're just trying to find a way in. They're very, very popular for people to apply at VC funds as an intern to just try to get in there. And the rejections are by the thousands. I've also applied, just offered to even volunteer to do some work for some VCs. And their response is like shock, like, wow, why is this guy like offering to volunteer for us? And I would be the one teaching in there. But I don't really need the experience. I don't really need the knowledge from them. But it would help to because I've been the business person, the operator, all of my life. I don't have the VC credentials, right? That many people judge everybody on. So it's a bit of most people, they have this unknown quantity. Many humans, right? They have a lot of skill, a lot of understanding, a lot of experience from their life, but it's not quantified according to the system of the man on the social media, your documents, your CV, your history, many references, all of this. So they call you an unknown quantity is what they'll call you, right? They'll refer to these kind of people. So getting that quantification by others, which is ridiculous that we have this kind of system, but that's what we have. Because people are so antisocial. They're not actually conversing with people and have the discernment to be able to ask the right questions and figure out, okay, here's someone's level of experience, of understanding, of skill, of knowledge, to be able to figure that out. I mean, maybe the much more experienced people that have hired many people and have to evaluate many people in business, okay, they're generally, hopefully, going to be a lot better at this. But with how bad VC are, it doesn't give you that much hope. VC are very bad in general. It's terrible how bad they are actually. So we'll do some lessons on that, going through many classes we'll teach in here, and I'll show one quick example. In being so frustrated at the questions that VC often ask founders, I broke down a list of 100 different questions the VC can ask founders to try to grade them basically on, let's try to get this up here. And I call this the AOE Fog a Mirror VC Basic Competency Litmus Test questions, by being a little bit facetious and funny about it, but it is really, if a VC doesn't know what questions to ask a founder, and they're asking the wrong questions or really poor quality questions, once you have experience to know like what are the proper questions to ask founders, you can tell what is the level of competency of the VC. What are they doing, right? What is their skill level? I broke down the questions on 100 questions, and I broke them into 5 categories. Here's a list of professional questions, then intermediate questions, and then we go down to amateur questions, rookie questions, and then what I call disqualified questions. All right, so 20 in each group. Important questions, and there's many, many, many more, but these are some that are very valuable. Here's some of the ones that would basically like disqualify a VC from being considered to be any kind of competent VC or quality VC. Questions they'll ask the founders like, why don't you move to Silicon Valley? Why don't you just bootstrap a company instead of raising funds? Why don't you just get a bank loan, right? Or something like, can't you just take some equity out against one of your houses? I wish somebody asked me that question actually a couple of months, but I will never forget that. It was just so delusional. Hopefully, I really hope, I pray that that guy and his family has like 10 houses that's where they get their money if they need it. But it's certainly not the situation of, 99.99999% of humanity, right? So how will I be able to get money out of the jurisdiction if I invest to you? I mean, this is just so outrageous. Maybe if they're in Russia, that might be a concern for you, but even then, somebody creative will find a way, right? So, somebody saying, why don't you pivot to a completely different industry? Do you have a Delaware C corporation? Because I won't invest unless you have one. I mean, these kind of thoughts, right? How big was your family and friends round? So if a VC is asking a founder these kind of questions, especially on the first meeting or something like that, in the first conversations, the founder should be able to tell that this VC has no idea what the hell they're doing. I'll read some of the professional level questions now in contrast to that, right? So here's one that I think is very underrated. Tell me about your values and what Jesus Christ means to you, your life, and the future of humanity. Are you mission-oriented for humanity? Why? How? I mean, this is something that never gets asked to startup founders. And what we're seeing as a result of that, when VC are not asking these kind of questions centered around values, let me read it a couple more. Here's another question. How much are you against corruption? Are you playing the game? Or are you fighting it? What's your stand in life? What are some of the things that you've sacrificed in life to fight for humanity? Right? And what are the key milestones you aim to achieve with this funding round? And how do they position you for the next round? So these are very important questions, professional level questions. But I think personally, the values are the most important, because when you're investing into startups, what you're really doing is investing into the founder. And many VC talk about this. They say, we're not investing into businesses, we're investing into people. They very often say that, some of them, and others don't. And it's true, they are funding the people, though there's all kinds of things going on in the venture capital industry. And just like if you take a group of any 1,000 people, doesn't matter what topic you're talking about, there's some that are going to be extreme left, extreme right, and then there's like all variations. None of those 2 people in the 1,000 are exactly the same. People are unique. They have unique different thoughts and whatnot. So all the VC are doing something a little bit different than each other. There is no real standard model. There are some things that are kind of more standard, but really high quality VC and intelligent thinkers, they understand this about socioeconomics, right? Social engineering, right? Sociology. People are different. There's different variances, and you can adapt and work with different people have different needs in order to work with them. And you got to have different relationships with different people in business, different strategies for different situations, right? So, and quality investors, quality VC are good at that. Quality business people are good at that. They can kind of move the goalposts. They can innovate, right, for all of these situations. They're not hard-nosed, one-size-fits-all. Life is like it's just the square peg in the square hole, and that's it. That's not life. That's not reality. Life is like a box of chocolates. You have all these different startup founders. They all maybe need something. Every startup is broken, totally like just a mess, and all kinds of broken things in the beginning because they don't have the money to buy all those different pieces, to have the Fortune 500 billion-dollar corporation look and standard and feel that everybody wants. And everybody kind of expects the startups to have that when they start, which is totally unrealistic, but most people don't realize it's unrealistic. To expect that these smaller businesses have everything perfect, just like your Apple and everything else. But we kind of all expect that and want it. We want to see the standard, and even we will judge these people and their businesses on that standard. We'll say, okay, well, they can't be trusted because they're not to that high level standard. So then, right, humanity all suffers as a result. We need to get out of that thinking, be a little bit more understanding towards the human condition of people. They need to start somewhere. All the small businesses are going to have some pieces missing, and but they could be very valuable, and we need to continue to support those. Otherwise, we're not going to have the jobs of the future. 99% of the jobs are created by small businesses, and that's why we have no job growth in the last quarter, is because the small businesses are not getting funded. They're not getting any finance. All of the finance is top down, and there's no trickle down. There's no trickle down. It's all going to the Palantirs, the giant corporations, the Gateses, the Nvidias, the Pfizers, the Modernas, these huge corporations, the Microsofts, and so on. And the 10 stocks in the S&P 500 index are holding up the entire index. And the performance of the 490 stocks, the bottom 490 stocks, if you can even believe we're saying that, is way less than those top 10 corporations. And those top 10 corporations are using AI to completely, gut their workforces. So they're laying off hundreds of thousands of people, and there's no finance going down, right? So there's no trickle down, and there's no small business funding by the Trump administration right now because they've got so many problems and so many left over from the past 4 years. They're trying to fight all of this, as the Democrats are just attacking them, tooth and nail, 24 hours a day, trying to derail everything so they can go back to just this mass dystopia that they built. And nobody's funding the small business. Nobody's funding small manufacturing, and the VC are not funding it either. 60% of venture capital money is going into fake intelligence apps, and then 80% of the 40% is going to software. The world doesn't need more software. We need small businesses. We need small industry. We need electricity. We need clean drinking water. We need all kinds of natural health solutions. We need every baseline existing thing that there is for industry, of every possible thing there is. And the VC don't want to fund that. They want to fund new flashy widgets, new flashy, the potentially the next Uber. And what's happening is they're crash and burning at record rate. They're underperforming at record rate. And they're just end up piling on to all of these Ponzi scams where 95% of the VC are followers. None of them are leaders. None of them are first check. So the AOE BAM fund is a first check investor, first check investment fund. So and we aim to and intend to be the only investor into our startups. And we will operate the fund expecting that we're going to have to raise that investment capital from different places, from angel investors, family offices, different places, blockchain, and so on. But this is our mentality. We're going to have to be the only investor. So our businesses are all going to have to profit. They're going to have to be profitable very early, to be self-sustaining very early, and be self-sustaining and profitable even in the first check for us to construct that. So then we can use that to market, go get more capital, and then copy these and scale them up. We can't expect that other VC are going to pile on. You just can't expect that. The amount of venture capital funding in the industry has been going down 6 years in a row, going down very, very, very fast, because the VCs are just doing this. They're just copying each other. all of them are copying each other. None of them are doing anything new. They all talk that like supposedly they've got some new wild thesis that they're going to beat everybody, that they're going to do something new, that they're going to be the ones to find the next Uber and everything else. And you look at what they're doing, and it's the same copy and paste crap. So 70% of VC funds are failing to raise money. All of the people that normally would have invested into VC funds, they're not investing into these funds anymore. Because it's the same thesis every single time. And these VC come in totally ignorant and delusional. They think that all of these investors haven't seen this same exact thing before. Only establishment people, they say. Only Ivy League. Only the rich people. Only the friends and family. Only the top 1%ers. Only world-class teams. Only people that have exited 2 or 3 times before. Only 1 million plus run rate. I mean, these people don't need your money. These people have rich family. They have crazy rich friends. They have money. Their family has money. They can just go take a loan. They don't need the money from these people. And the VC insists on funding them. There's a big establishment tenured people, establishment scientists, establishment government, quasi-government intel agency, dev org people. They're funding them. And these people have tons of options in their life. They don't need to, right? They're working for government and these big corporations. They didn't have to really perform anything. They weren't going to get fired. They still get this huge salary. They're working, you know, maybe 20, 25, 30 hours a week in a cushy corporate job or government, a job where there's no performance standards at all, or right, intelligence agencies or whatever, no performance standard there really at all. They have tons of options. They can go everywhere. They got the Ivy League. They can go anywhere. They don't really care, right? And if things are kind of, you know, if there's any animosity, anything at the work, you know, they're resigned. They're going, moving on to whatever. They schmooze this. And the VC are funding people like that, right? Those are the worst kind of people in the world to fund. Those people they not only don't need your money, but they're not desperate for your money, right? So they're not desperate to get a result where their entire life, their entire future, their entire career is based on how they're going to perform. Like it's do or die for them. They will never get a chance. Who you want to fund as a VC investor is somebody who will never get a chance again if they don't achieve this. That's the person that you want to fund. Somebody that is going to be like stressed out. If I don't achieve this, I'm going to be dead. This is the only chance I'm going to get. I have to make it. I have to do this. They're going to work 24 hours a day, right? Now we want them to sleep, right? We want them to have ideally some life balance and these kind of things, but you don't want to exploit people. But you want people who they're going to fight for this. They're going to make it happen. They're going to die for their business, like if that's what it takes. And then you can sleep, but you know those are not the people that are just going to be satisfied with lighting your money on fire, burning $100 million. Like how many times has Bill Gates funded 100 or 200 or $300 million? Well, he funded like maybe 5 million because he was involved. Hundreds of investors piled on, and he convinced all these VC to pile on in this, I don't know, RICO cartel money laundering, embezzlement scam. I don't know what the hell's, how this keeps happening again and again and again. And now he's got this nickname, Kiss of Death, because everything that he funds that's a startup goes on and dies. And that just doesn't look like it doesn't look like a coincidence anymore. There's something more going on there. I will just say it. I mean, it's you know, fool me once, but fool me like 50 to 100 times. $100 million invested, and in 12 months, it's all gone. All the money's gone. Everybody's gone, and it implodes. And this is again. I mean, how many times does this have to keep occurring before somebody, you know, finally calls the cops, right? You know, for me, I'd call it the first time, but a few dozen, a few hundred. I mean, how could this be happening? There's obviously more to the story there. So this is very, very common in Silicon Valley and these investments, and it doesn't need to be. If you funded the right people with the right amount of money, with very strong governance to overlook all of the decisions that they're making, right? And we have some veto authority, where we're not just going to hand a founder $5 million. We're actually going to look at the construction plan of this business and chop it up like a construction plan and look at all of the different separate milestones of what can be achieved and each reasonable step of that, right, over an 18-month or 2-year period, to get to profit and be a profitable business. If it can be done sooner, of course, we want it done right away. But at the longest, 2 years. I mean, no business really should take 2 years to get to profit, realistically. I know a lot of VC prefer to do things that way, never profit, never. This is really ridiculous, and that's why so many of them are failing. That's why so many of the businesses that they fund go under. So there's got to be a plan, and then it's sliced up into pieces, and then each of those pieces is funded one at a time, right? Just fund that little bit, and the founder builds that out, constructs that out, and is done. Okay, great. Now he qualifies to get the next piece and build the next piece, and then you fund that, and then he builds that. Then you fund, and that makes things much more secure and much more disciplined for that founder, who generates better results. This kind of governance, because right, they're not going to get any more, but if they do every one of these steps, they're going to get the next. They're going to get through to the line, and it keeps the urgency going on. But when you fund $5 million to these establishment people that are, the first thing that they do is go rent a mansion to throw a party and rent jets at $600,000, 2, 3, 4, 5 million to fly more investors around. Then all the money's gone, 100 million in a year, and there's nothing. It's imploded and nothing to show for it. And everybody's like, right? These Silicons establishment people are, oh well, we failed. Moving on, and they got 20 million in the pocket, or 30 or 40 or 50 million of that 100 million in the pocket. Some are into some houses and whatever. So preventing the loss, right, is a famous statement of Warren Buffett. If you're going to invest, make sure you don't lose. I don't want to lose money. Firstly, why he says, don't lose capital, because it's much harder to get it back. So VCs should be much more secure with the capital than they are, but they're not. They take way too much risk. They, instead of leading, they follow, and then they follow on to the most risky things. And there's no governance at all. And when you're a follower, you never have any control of governance. You only have control of governance when you're a leader, when you're a lead investor. And then you set up this premise from the beginning, right? The onerous governance, which is really, I built onerous governance for our investors in AOE. I built the most onerous governance. We literally logged every single dollar of expense, uploaded every single receipt to a Google Drive, took pictures of it. Then after that, had our bookkeeper go back and take pictures of every single receipt and upload those to the Google Drive as well. Had monthly financial statements, and we shared the Google Drive with our investors. And we even put a security cameras inside of our office in all of the rooms, and gave the passwords to the investors so they could watch us 24 hours a day and see what's going on in there. Why not? So we went for gold standard of transparency and accountability. That's a very easy thing to do. We even gave them spending authority, where if they didn't, right, if we're going to go buy a Lambo or something, they could say no. What's wrong with that, right? We even gave them the authority that any expense over $5,000, they could veto that, especially if they had some other supplier that was cheaper, and they said, hey, Thomas, there's a supplier. Can we get you to buy these chairs and say $2,500? Great. We can save money. Great. Okay. It's their money. It's the investor's money. It's not the founder's money. So better standards need to be set. And that's a big problem, because you have every day now 3 to 5 $100 million plus mega frauds, mass debacles in Silicon Valley, VC funded startups that are collapsing, going bankrupt. All the money's gone, vaporized. And for $100 million, you could fund 1,000 startups. So you have one company that everybody piles into. It's a total joke of these establishment con artists, right? Your Nikola Motors, your WeWorks, your scam bankman frauds, your scam Altmans, all of these kind of people, right? Something Bill Gates funds. Northvolt, 20 billion, so on. 84 billion WeWork, 36 billion Nikola Motors, $100 million, and it collapses to zero. All the money's gone. That 100 million could have funded 1,000 startups. 1,000, you could have 1,000 companies built to profit, profitable, sustainable, growing, and creating all of these tens of thousands of jobs, 20,000 plus jobs, and you just destroyed all of that. You just took a wrecking ball and smashed the futures of all of these people. This is insane. It's so reckless and irresponsible and totally upside down for what should be happening. And then you're just consolidating all of this money to these corrupt, right, elite ClickBank insiders in Silicon Valley, and nobody else gets anything. Nobody else gets a chance. All of those people are completely excluded. So that's very frustrating. So that's also why we're making the AOE BAM fund, the Business as a Mission Fund. And one of our requirements is only the other 99%. We will only accept the other 99 percenters. So not these establishment elites. No Ivy Leaguers. We will not fund an Ivy Leaguer. We will not fund these, top 0.1% of income earners, top 1% of income earners. These people that are from the richest cities in the world, and we will not fund them. We will not do it because there has to be some diversity, equity, and inclusion, right? And Silicon Valley and in New York and Tel Aviv, their intention is to exclude everybody else. And they've gotten more and more and more exclusionist over time, not more inclusive and inclusionist over time. So, and there need to be funds for the other 99% of humanity. And all of these VC, it's very strange, but they love to lie that the other 99% of humanity is not worthy of funding. But these same people walk outside of their house every day and buy endless numbers of products and goods and services from businesses and use their products and services from these businesses built by the other 99% of people. All day long, they're interacting with them, right? And yet they make up this total bullshit that supposedly those people are not good enough to build a business. They built all of America. Where did you think America came from, right? But they have this. There's an endless number of fake, fraudulent, false dogmas being pushed by the establishment, and more so than ever before. And there's a lot of social engineering, manipulation, and propaganda being deliberately orchestrated to do that, because it creates an environment of anti-competition, of this World Economic Forum style consolidation, mega consolidation, that then keeps everybody else out. And they've been trying to usurp all of the startups in this regard, and there's many things that go on there, including the refusal to fund real entrepreneurs, the refusal to support real entrepreneurship, which of course means funding only sole founders. If you cared about funding entrepreneurship, you would want to fund sole founders, because groups, slap-up teams, community, social democratic projects, commissar projects, that's not entrepreneurship. Entrepreneurship is, I'm going to leave the corporation, I'm going to leave the job of the corporation to go start my own business, right? To what? Start my own business, not start another corporation, slap up with a bunch of other people just so I can work in a cubicle calling the corporation again. Right? But they want to lie to you that entrepreneurship is. So they're redefining this, right? Just like they redefined, a man and a woman, even what those things are, and redefining everything. But entrepreneurship is a good example. Elon Musk, right? He has control. He has some power, some direction. He has alignment. So it's based on his vision, his mission, what he wants to do with the company. And he's going to make decisions, and he's going to pay the price for those decisions, and have the hardship or not. And he's got to navigate the waters of the company. And it's a free market. If his strategy is going to work for the conditions of the market, then he will be successful, right? Unless criminals overtake that, the RICO cartels overtake that, which he's battling with a lot of that as well, as you can see. So, or somebody else possibly does a better job. Somebody else is, more of an elite propped up kid than he is. Somebody else was assigned to run the technocracy like he is. Well, maybe it wouldn't be him then, right? So, so the VC are doing a bad job. So more people need to get into the VC industry and become venture capitalists. So I welcome you to join our fund, and we're going to select a small number of startups to fund, 10 to 12 startups, and we've already got a very solid list, and I've been working on this for quite some time, curating down what startups to fund off of I mean, there's endless lists of startups in every single industry that are kept. Of course, 50 million new businesses starting every single year, and much of that is database. You can see what all of these are. There's many startup organizations keeping track of this, filtering these, looking at these. We have all of the business data of all of the businesses in America to see what businesses are more profitable than others, which ones have the most profit, the biggest profit margin, the biggest demand, the biggest vacuum demand, crisis demand, right? The biggest unfilled needs in humanity right now, where you could just put a business in there and guarantee it's going to profit, and you can copy and paste this here. Very easy, 2, 3, 4, 5, 6x, 10x potentially, depending on what little markets that you're in. Want the most reliable successes. So instead of taking any unnecessary risk, we're just going to go for the easiest top 10% performance that money can buy. The easiest no-brainer, top 10%. Take all of the best strategies in business, the best marketing, sales, and whatnot strategies, finance strategies, put them into those businesses, put the packaging and the branding and everything else on them. And even though that wouldn't even be needed because they're just brain dead churning out cash, there's a lot of cash cow businesses out there that have not saturated the world market to any stretch. We have half of humanity that doesn't even have a secure electricity. I'm sorry to tell you, but nothing is saturated in this world. There is nothing completely saturated in this world. There is so much opportunity for venture capitalists to make a great return and beat the other 90% of VCs. This is not a difficult thing to do. Even with a large fund, a $100 million fund, even with a $100 million fund, this is not that difficult. It becomes more difficult with a $100 million fund. You need more staff. You need to do more, no question, and you need to build slightly bigger companies and have bigger successes. But there's plenty of room to do that, no question about it. So I began with curating a list of over 500 different businesses, curated this down to 120, curated down to another 100 businesses, and then it went the other way from ground up to see what is open, what is available, what is desperately needed that could very fast scale and plug all of these holes, and then narrow these down. So we have the first 10 to 12 are very, very solid that we would do. Completely no-brainer, successful builds, very easy to build to profit. We just need the money to do it, and then we need the managers to run them. But it really does not take it doesn't take 1%ers. It doesn't take world-class teams to do this. These are your average, working class people can do this, and if they have some management support coming from the VC, and then a support team to support those founders, those entrepreneurs, to help them to basically a general contracting office. When you have a construction company and you have the construction contracting office, that construction company, they might have 20 projects, 30 projects going on simultaneously all across the state or across the city, different places. And they have a central construction planning office that's for planning out all of those projects, doing all the procurement of all of the different pieces, subcontracting out all of the subcontractors, and managing all of this, right? People are familiar with that idea. So we will have eventually a staff team office that is doing this for the startups that we are facilitating and we're funding. Though funding 10 to 12 small businesses, you obviously don't need a huge operation doing that. This is very, very small, but a very, very valuable in what this can achieve. So we will do that. And then in terms of scaling these, it gets much, much easier. The most difficult thing, if you can even say that, is just getting the business to profit. And I mean, again, it shows how incompetent most VC are, because this is not a difficult thing to do, to choose businesses that can profit or choose to scale businesses that are already profitable. If a VC can't handle that, I don't know what the hell that they're doing having the name VC on their business card. Please just, retire, hand us over the money, let us beat the performance, and you can take some share of the VC fund, and you can, right, just join us and sip your little tiki torch drinks and have a nice time, have a nice life on the beach. Happy to take it over. Happy to take over the funding and achieve the top 10% decile for you. This is a very easy thing to do. Please, save yourself the hassle. Please join with us. I mean, because this is not a complex equation, folks. There's so much out there. How about electricity right now, right? It is the #1 demand product in all of human history. What if, you have a couple of these, breakthrough energy stars, or one of them, right, which we happen to have as an anchor investment in our portfolio, which will guarantee a 10x plus return for our investors, even if 100% of the other investments went completely tits up and went bankrupt. The investors are still going to get a 10x from this little guy right here, Alpha Omega Energy, that alone. In the first 10 to 12 businesses that we want to fund, we want to fund a conglomerate style, which is, most people are familiar with that. We fund a group of businesses that are all helping each other, that are all buying from each other, that are all customers of each other, that are all supporting each other in the growth. So every piece that we add helps everybody succeed. So a good number of these additional businesses will be using electricity, buying electricity from AOE right here, which makes it AOE skyrocket. Doesn't need that to 10x, but will just make it much more stronger. And then makes the other businesses strong because they're energy independent, have very low cost of energy, and those businesses, their #1 cost of doing business is electricity. So why not get them very cheap, reliable, dependable electricity from your anchor investment? And then you have, right, you're controlling the cost, in fact, the main cost of those other business units, and keeping it very low, keeping it very sustainable, much more profitable. And then you can actually help each other as well between those businesses if there is a need for any of that. So we're going to do that direction as well, which is a very smart strategy. A lot of VCs do that. A lot of VCs, they look at their portfolio of what they have existing, and they're looking for other businesses that can actually fit into that portfolio. What else can we add that is going to help our existing ecosystem? It's a common VC strategy. Not every VC does that. Not so many talk about it, but many actually, they think about this and they prefer to do that. So they're hoping to find something like that. Most private equity investors, this is the strategy that they prefer, actually. They would generally want, like if they're going to invest money, private equity or corporate VC, if they were going to invest to our startup, it would not be for the purpose of startup investing. What they want to do is have an Alpha Omega Energy, I keep forgetting my direction. They want to have Alpha Omega Energy come to their, let's say, factory or data center, provide the electricity, and they're investing into that startup that's providing the electricity at their factory or their data center on their site. So that would be why their main interest to invest to an AOE. They wouldn't want to be investing to an Alpha Omega Energy just as a standalone to earn that profit. You could argue, hey, they should be investing standalone. That's that's crap. Founders get very upset about that actually, because they really want investors to invest for the merit of their actual business, not only if they're going to come and supply something to their existing company. So that can be very frustrating as a founder. And I've gone through that many times talking to companies like that. But at the same time, I completely understand it. And it is a very smart business strategy for that corporation. Obviously it is, right? So if you're running as an example, a janitor business, wouldn't it be smart to buy the toilet paper company? Buy a toilet paper company or fund a toilet paper company. Fund a cleaning products company of all the cleaning products you use. Fund a HR company that supplies all of the staff that you're going to need for the cleaning company. Fund some marketing company that gets you all the customers that you're going to need for that. Right? It's a very good strategy, and many people have done this before. Very advantageous, and then you just all of the pieces of that total supply chain and the profit in that service business. It adds up quickly, and then you have more flexibility to help each of those businesses, right? Help them with credit lines, and all kinds of things like this, which makes the whole unit much more successful. And makes the success of the VC fund much more successful. So that's the direction that we're going to go with the fund. Make it as simple as possible, as easy as possible, as keep it simple, stupid as possible to achieve the goal of high performance with no losses, incredible reliability, very strong governance over those startups that the founders will accept and they will like. And we're going to do this as a venture studio type build where we have a lot of control, where we're seeding those businesses and seeding the technologies and the business models into there based on what the actual needs of the actual human market actually are. Not some new flashy ideas, not some bull crap, pie in the sky. We don't know when this thing will get to profit. We have no idea, none of that crap. No. So existing profit, immediate to profit, like this is as brain dead, obvious, and simple as possible. And good luck finding a venture capital investor that is actually running like this. I've never seen it before. It's so outrageous. And it's getting worse. It's getting worse. But anyway, what we can do is build better than that. And it's not going to be that hard. The main challenge is just getting the capital from the investors to then be able to invest. That's the main challenge. We will definitely provide the performance without question. So let's go to my previous slide I was sharing here on the difference of what a organic business is and then a startup business, and how to construct a successful business and construct a business franchise model. So the startup industry, startup financing business model was made out of the franchise model, and then it started being applied to technology and kind of became a hybrid between these two over time in Silicon Valley, because there were a lot of defense contractor companies building out the internet and all of this data centers and communication networks and telecom and everything else out of it. But this really came out of franchise before McDonald's, and then after this, once they started getting financing. So firstly, we got to construct the first model, right? The first model proof. So something small. So if you're going to really chop this up into baby steps, even though we know the profitable franchise. So I have it here, a picture of a house or a franchise. So we all know the suburbs, you're building one house. When they're constructing that house, maybe they're constructing it for 50% of the sales value of the house. And they're going to build 10 houses in a suburb here. And they're going to 10x, right? Because they're building 10 units in. So we construct the first model proof, maybe a minimum. Maybe we don't have enough money for the first house, so to fund the first startup yet. So we need to convince investors. So we're going to build some little tiny business. And just as an example, say a food cart, some mini little food cart, maybe this little tiny one here. So we have a product enough to show something and prove that we can get the demand and get the orders, right? For whatever business that is in general. So some little block, and we build that out, and we use that to show on the videos, on the websites, on the pictures and everything else. And we start to construct that. Maybe it's 30,000, maybe it's 50,000, maybe it's 100,000. We start to build that up. And then we have maybe a medium-sized build. We get to the first profit, right? That's if we can split up the capital model from maybe, say, something bigger of 250,000 or 500,000. Maybe it takes a $250,000 check to get to profit, or a $500,000 check to construct the entire house, if you will, or franchise to get to profit. So maybe we can split that 250 into a 100 first piece and a 150 second piece. Maybe not, right? But those milestones we can build, and then we have a piece of that going, and we're doing well, and we can use that to leverage that milestone construction to then get more investment, right? So then we once we have this done, the first one's finished. We have that house franchise. And we all know that the home builders, maybe the build cost is only $250,000. And then right away, they're going to have the appraised value of the house When it's halfway done construction, they'll maybe appraise it at 300,000, and what the appraised value when it's finished and it's going to be for sale on the market, and it's exactly built the same as every other house or every other McDonald's franchise or whatever Olive Garden or whatever on the road, the appraised value will be like 600,000 for that it'll sell for, right? So we're spending 250,000 and we're collecting 600,000 when we sell that, right? There's value immediately, additional equity that we just built in there. We built more than 1x just by constructing it. We already have 1x. All we have to do is sell that off now, right? And we will collect 1x immediately. And we have all of the capital back. The initial capital is secured for the investment. And we have a 100% return in there on the construction, right? And then once that's done, we just go do 10 copies. We can do 5 copies in the first phase, 5 more copies in the second phase, and we have 10 years to do this in the life of a venture, 10 more copies. So we'll have 6 million of total construction appraised value, sales value, and it costs us $2.5 million or so to do. And then, right, so we have a massive return on investment there of what was needed. And then if we have a business that's going to continue doing this, then we're getting many, many X on the capital, right? So this is the basic understanding of the startup business model. So you can do organic from the beginning and do this just by selling whatever hamburgers or selling whatever you're doing. Or you can itemize every single thing, make a business entire model, and then go try to raise the 2.5 million from the beginning, plus 18 months of money, the running costs of what you're going to need to construct these 10 houses immediately, right? Go raise and start to construct all of these 10 houses immediately, and start to even construct the business that's going to provide you to go and build the next 10 houses, right? So you get 2.5 million, maybe $500,000 for 18 months of expenses, so 3 million, maybe another 2 million to start building on all of the rest of this stuff, and then have contingency fund to make sure that you make it and you don't have any problems. So you raise 5 million from investors. That is the startup business model. Using money to build that thing right now, or at least construct the very first one with the plan to then get the next round of money to build the first 5, then the next one. The startup business model is not an organic model where you're doing it by yourself, without the money, without the investment, based on your own lending power at the bank. So if you're doing it, if you're bootstrapping is not a startup. Startups cannot be bootstrapped. That's not reality. A bootstrap business is not the startup business model. It has nothing to do with the startup industry. A bootstrap business is a small business as usual, the same as the last 6,000 years. If it's not VC backed, and if the VC didn't fund it early stage, if the startup did not need the money in order to construct the first one just to get to profit, just to get the viability, then it's not a startup. It's not a startup business model, folks. If it can be built organically, it is not a startup business model. And most people don't know that. And most people are not teaching that anymore. I find it very ridiculous, very frustrating to see that. It's really people have been dumbed down significantly. And there's many millions of people preying on and exploiting, taking advantage of startups and founders, teaching them the wrong thing and blood sucking off of these people, charging them fees, charging them consulting fees, running these fake incubators, which I call fake incubators, and fake accelerators, which I call fake accelerators, that don't even have investment funds, don't have any investors at all, have no intention to invest into the startups, and lie to founders that you can bootstrap yourself and all that. Like, it's just total bullshit. That's not a startup. They should tell them that it's a small business, and they should be separating the startup business model so people understand what that is, right? But they're not doing that. So the industry is failing in so many ways and needs better. And it's not that I'm so much smarter than everybody else in this industry. It's just that these people are doing it so bad. They're so bad at it. They're doing it so wrong. They were taught wrong, and taught many. And it's like the dogma and the cult is just repeated so much in all of these places, and it's been deliberately orchestrated by this establishment that wants to eliminate all of this competition and consolidate everything to itself up into the corporate private equity RICO cartel. There's a massive concerted, orchestrated effort to do that. And we can see that with how they refuse to fund sole founders. And sole founders are much more successful than teams, or world-class teams, much more successful in the numbers. They succeed in terms of percentage of getting to profit and producing successful businesses. Sole founders are way more successful in the numbers. They don't generate as much revenue as these huge teams with the massive money that's piled on by VC. And of course, they don't generate as much revenue. They weren't funded as much money. If they would have been funded as much money as these big team collabs that are done, though the vast majority of those fail, way more of those fail than the sole founders. Way more of those fail than the sole founders. So that should be taken into the equation. It's not, right? It's not. But if that was actually taken into consideration in the data and adjusted for that, the sole founders would be even more successful. And then if they were given the same amount of money, which they're not, so you can't really see, but then the sole founders would be even more successful than they are. If that was the case, we don't have the data to even see that, because it's not what's happening. So the sole founders get funded way less, not even 50% as much as the teams. But the sole founders, they're going to hire teams too. But they're going to hire their teams and pay money to the staff, unlike this slapped up volunteer teams from these executives and rich kids and whatnot. The sole founders, they're going to. Every startup is going to have a team. Every company is going to have a team. Well, what does that mean, right? The structure of that will change a little bit. So they're much more secure. So our fund, we intend to fund only sole founders. And 65% of these team slap-ups, they fail. And they fail because the team's up. And that's the number one reason for startup failure, is the team breaks up. You have these disagreements and people going different directions. You have the 5 different egos in a room, 5 different intentions, 5 different, and it's just always a disaster. You have no alignment. You have no, you had everything was working and going, planned the right way in the beginning, but now some guy has been added and he's been given like a 20 or 30% share cut. And then he's got his own intention. He wants to pull this into some whatever political something. And then it's just disaster. And the whole thing falls apart. And the original founder gets tired. He's not happy there anymore. So he quits. And then the whole thing just implodes. It's a well-known statement in data set in the venture capital industry that the startup never truly fails until the original founder quits. But there's no quicker way to make an original founder quit than to start meddling with the business, right? Adding all of these different board people that don't really belong there, that are trying to control this instead of being passive investors. And in the very beginning of a startup, at the early stage, that's okay, because you're putting money in when there's, vast majority of this is not constructed yet. The investor has the most risk, so they should secure their capital and have onerous conditions where it's their money. Realistically, there should be more security for early stage investors than there is right now. In fact, I'm all for 100% shares in what's called a reversion contract, where if the investor puts in, let's say, $500,000 to Alpha Omega Energy, I'm happy to give them 100% of shares, just not a veto power. I would have a veto power over running the business, intellectual property, other things like that. So protection for the founder, protection for their IP and their business. But the investor, it's their money. So if they invest and the founder takes off, every piece of equipment, everything that's been purchased, that belongs to the investor, lock, stock, and barrel, until he's getting his capital back, and then there's some return going to be going to some. Then the split, the percentage split, will be there, right? And any ethical founder will agree to that because he just needs the capital to use to get to where he's going, right? He's not, if he has any ethics, he's not looking to take that investor's capital and put it in his personal pocket. He's looking for that, as a finance, as a loan, so he can build his business and make tons of money off the back of that, right? That's a tool. That's the proper mentality and the way that the founder should be looking at it. So every founder with a shred of credibility, ethics, integrity is more than happy to have a 100% mortgage on his startup for whatever is invested, as long as, right, there's not endless meddling going on. Oh, we're going to move you. We're going to relocate you to here. We're going to change your business offering to this. We're going to change your product strategy to that. We're going to change. Oh, and we're going to put these staff in here, those staff in here. Like, there's a certain point where it gets totally unreasonable. I know to us first, all your strategy, all your code to us first. So it's better to have onerous governance than to lose all control. And founders are much more willing to have onerous governance, so some hoops to jump through that they can achieve, than to lose all of their security, right? So many founders are willing to agree to that, and most founders will never get funded anyway. So, and they understand this, so they're very flexible. They're much more flexible than most people would actually think. So, and then if the investor is secured, the capital is secured early, and then once the business is profitable, the house is constructed, if you will, the McDonald's franchise is constructed, operating and profitable, the customers coming in now successful and profitable, then, and there's equity in that business, then these shares are then split. And as the founder grows that to 2x, 3x, etc., the founder's share percentage goes up back to the regular standard of where VC are doing things today. So over the long term, right, the founder is protected, the founder gets everything, but in the short term, when the investor is at risk, the capital is at risk, it should be that, just like the bank, if you're going to go construct the house, the bank has 100% of all of that money. They need to get paid back first, right? They need their capital back, right? If the house gets sold, the first money coming out pays the loan of the bank back. And then the profit is going to go to, the owner, the person who constructed it, the person who's constructing that project. But if the bank is providing, if they're going to get involved on a business or investment standard, in addition to just giving you the loan, and they're going to be providing some other things and so on, well, maybe they're going to take, and if it's a business, it's more risk, it's not just a house, it's cookie cutter, that's easy for them to sell, then they're going to take some equity, right? So the bank takes a little bit of equity there, and then they're going to cut you up on a construction draw schedule. They're not just going to give you a check for $5 million. Say, okay, good luck. Go ahead. We trust you. Blind faith trust you. Go build the entire condominium tower. We're not going to look. Let us know when it's completely finished. They don't do that, right? They give you enough to build the first floor. And then when it's done, the inspector goes out, looks at everything, signs everything off, and they advance, the concrete, pour all the contractors to pour the second floor. And then that's done, and that's how they do it. They split this up into many different pieces, usually maybe 30, 33 pieces in a construction draw program, right, according to your construction plan. It's very common. There's nothing complicated about that, really. It's not a big deal. I don't think it's necessary to split up a startup funding into 30 pieces. That's a lot. I'm not looking to do something like that. But having some governance is very valuable. So then if a founder takes off, they do the wrong thing, you're only losing 5 or 10% of the money. So instead of losing $1 million, you're only losing 50,000 or 100,000. You just saved yourself 900,000 or 950,000 on the loss. But VC aren't doing that. Most VC are too lazy. They're just too lazy. They just don't want to do it. When you talk to these people, they just don't want to do it. It's ridiculous. Like, get the hell out of the business then. I mean, put an advertisement in the paper or on monster.com or Indeed or any of these places. Put an advertisement out there. Yeah, VC retiring from the business, right? Who wants to step up and, are there any financial advisors out there in America that can handle some basic finance? You can help to finance some of these startups. I mean, how many financial planners are going to put their hands up? And there's like 2 million of them in America. You can't find somebody to actually do a proper job. This is just like the VC industry it is so bad. The quality is so bad. And that's probably why 70% of VC fail to raise a fund, because of how bad it is. So we need millions more people in the VC industry. But the existing VC, they don't want the competition. They're not copying themselves. And we need all of the VC to copy themselves. We need that. So that's actually one of our goals of the AOE BAM fund, is to eventually copy our fund. So we'll make one fund, make it succeed, do this as quickly as possible. We'll then copy that fund and have other people from the community managing that, where I'm trying to step away from that overseeing role where now I'm just assisting. So we're using the first one, everything that was done, as a model for everybody to come in and do and copy. And then when we build that second fund, we're going to build the third fund concurrently, so at the same time to that. And those guys are going to start training the next guys. So the guys for the first fund are the people that right now they're experienced. They're running that second fund, and they start training the third fund, which is a different group of people to do. And then the third fund is running, and I help there a little bit. But then when the fourth fund is going, I'll be totally hands off. And this is designed so all three of those funds will then duplicate themselves. Again, that's ultimately what I would like to see happen. And then I would like to hand that off, all of that, to an organization like YWAM, Youth with a Mission, or some other even bigger opportunity, which I was thinking about earlier today, which I found, and hopefully I'll be talking to this guy about that. I might be possibly recruiting a couple people into this. We'll see what happens. But I've got another massive idea for this, which is so huge, much so much more bigger than myself. It's actually intimidating to me today. So I'll be processing this one over the next couple of weeks. Very huge and very potentially world changing. And I imagine people with a much greater experience than me in building these type of things would be very attracted in that idea, and just snatch it and take it over, or build another one. And this will go all kinds of different directions. I think this is probably going to, hopefully, for humanity's sake, become a huge trend in the future of what I'm building here. And it needs to be done. And it's one of the reasons I'm doing it. I'm sick and tired of seeing this situation for humanity, where we have 50 million founders. Breakthrough energy technology founders, #1 in the world, can't get funded. The VC don't want to communicate with anyone that's not in these, and don't want to fund anyone who's not in the richest cities in human history. Won't relocate to where they are in their own backyards. All of this bullshit talk about, you need to be in the ecosystem, like all of this cult, dogma, religious crap. They refuse to actually do anything to really change the world. They refuse to fund out into it, like change the world to them. Like they're building even more consolidation, only status quo. They won't do anything disruptive. These people, they're not gonna send people out to Cambodia to build. They're not gonna fund Cambodian startups. They don't care about these people. They don't care about humanity. They don't even care about most of their country. They couldn't care less about them. Everything's only in their city, only in their clickbank cult, only in their their locale, only in their political dogma ideology. They're so insular, and that's it's completely anti-human. It's completely anti-human. It's destroying humanity. When you look at this, what the venture capital industry has done over the last 10 years, in this wild, just completely soullessly evil dystopia that they've built for the world, where you're not even allowed to use your house, leave your house. Everything's a subscription. All the human rights have been stripped. and you're heading for, you know, this 666 Palantir, complete and total surveillance and control, spy manipulation, you know, arrest you for a tweet, completely destroy and burn your entire life for a tweet, psychosis that we're living in. I mean, it's from the worst, most completely satanically evil dystopian horror movies that they wrote for 20 years. And that's literally the reality that they're imposing on humanity. I mean, it's just outrageous. And this is all from the VC industry. They're the ones who, of course, the societal planners, your elite royalist families, the Rockefeller law. I mean, there's, you know, they've all been building this for decades, generations, all planned out prior to the VC industry really even taking form in America. That is certainly true. But there needs to be some, just how about diversity of any kind? There's no Christian startup funds in the whole world. Not one. Not one. Now, there's some people that claim to be a Christian VC. I would argue they're not. If you're not funding first check, early stage, from the ground up, business plan on paper, you're not a VC. That is not a VC. That's a private equity investor. If you're doing top 1% only, 1 million run rate only, elites only, right? World-class teams only, all of it. You're a private equity investor. Take the words venture off your business card. You can put capital on there, but late stage capital, because that's what you are. So we're going to be early stage, first check. And what we want is the simple business, the reliable business that can top decile performance, that is a no-brainer construction job, that, you know, many people can be hired in to do in terms of managing this. It's not a problem to find management teams, and where we run a venture studio, total governance, and we can replace the people, get that construction complete, right, to make sure that we have total security of our capital and total security of the return. And we will find the right founders for that. That is not a difficult thing to do in today's market. With 50 million small business people every single year, for anyone to claim that this is a difficult thing to do in this market, I mean, I don't know that anyone would claim that. If they did, they'd be disqualified from the industry immediately. That's a disqualifier. So we're coming into the last 14 minutes. I'll go another 14 minutes here. And people can go to our social media here and like, share, subscribe, and follow. Down at the bottom here, we have an X account, which is at AOE BAM Fund. Our new website that we're building is only partly built right now. Most of everything on there is broken, but you can see it. It's starting to come together. AOE BAM Fund. .tilde.ws. This is my Telegram. You can reach me personally if you want to reach out and join, find out more about it, or if you would like to possibly come on as an investor or refer people who might possibly be interested to getting involved in the venture capital industry, joining with us. Telegram at AOE Black Swan, and I made a Telegram group as well now for the fund here at the link. There's the link for the Telegram there, t.me/AOE BAM Fund, and you can send that out to people very soon. It's not set up just yet, but we'll have sign-up forms on the website in the next couple of days, where people can go to the website and then enter their info. Click on the join buttons there. The join buttons are there, but they're not linked to forms yet. So in the next couple of days, we'll have that done. And then people will be able to click on the join, and the forums will come up. They can enter their information, email, and everything else will be some questions just asking them, you know, if they're interested to join or become a potential investor, then qualify their investment experience, what they've done, some information, some social media accounts, whatnot, so we can kind of look and see, okay, who's this guy, you know, what kind of background does he have, what's on here. And then we'll have a meeting, do a Zoom meeting, and meet face-to-face with the members, and then we can invite them into our regular Google Meet meetings, which are like a Zoom call, basically. And we'll be doing 2 meetings a week. So for now, I'm doing these more presentation heavy, because I haven't started to heavily invite people just yet, because I'm building out the skeleton, all of this, getting this ready, and putting together these first videos, which will go on our social media, and video accounts across the different video platforms, which would be very helpful for people to go and watch this long form material so that they can get, if they really want to dig into, wow, what is this? Let's have a look, and they really go into this there. So that'll be available to them. But this will transition in the future to where instead of me presenting for an hour or 2 hours, where we'll have a meeting full of a bunch of people, and they'll be talking and they'll be asking questions, and we'll be going over some material and some presentation and some questions. Then maybe some founders asking some questions about their business, and dealing with the process of dealing with VC. Then once there's a bunch of us working on it, actually, then discussing the different items of construction and the contacting and solicitation that we're doing, and so on and so forth. And we'll be doing this open live stream to the public. So I've never seen anything like this done before. An open public venture capital company, never. They're very private about how they do things. They're very secretive about how they do things. They don't want anybody looking inside. They don't have any transparency or accountability. The venture capital investors, maybe they have their portfolio on the website. Many of them don't even have that. Most of them have very bad websites. They don't have any tracking systems on there to tell you the valuations of their startups, where they're at, how much revenue they're making, what's their profit, what's their quarterly financials, what's their monthlies. They have nothing. You don't get to see the deal terms. You don't get to see the contracts between the founders and the VC. You don't get to see the LP agreements. You don't get to see the LP limited partner mandate. So what the venture capital fund went to the investors, told them, here's what we're going to achieve, and then the promises to the investors to see why they invested. What are they promising them? You don't even get to see that, right? It's ridiculous. Like there's no openness of this industry to the public. There's no transparency. There's no copyability. And maybe you could say, hey, well, I understand everybody's trying to keep it as a business secret or a trade secret, but that doesn't help humanity. We have this massive hole where we have 50 million new founders a year, and they're not getting funded, and the governments are not doing anything about it. They don't care. The establishment elites, they don't want it to happen because that means more competition for them. The intel agency, DevOrg establishment, which is all front orgs and holdback and espionage and technology and model theft across, all of these international diasporas, whatnot, that are going out, your nexuses, your impact hubs, your UNDPs and UN stuff, all of it, it's all like holdback stuff. It's all fake, right? Just like Doge has totally exposed now 70,000 NGOs, billions and billions and billions of dollars a year, all wasted, all fraud. No small business is ever funded. Not a single startup fund made in the history of the UN, right? As an example, when they talk about development, what they say, they're open about it now. What they mean is actually development of front organizations. It doesn't mean what we thought it meant and what they frauded us in Talmudic subterfuge to think it meant. We thought it meant that they're going to invest in fund and finance the small businesses. And here we were all angry when it wasn't happening. But actually, when they were talking development, they were like, shh, what we really mean is developing front organizations to take over governments and overthrow governments and hijack their elections and do bribery and buy favors amongst them to get advantage and trading to, right? It was never about funding their people and helping them and financing them and actual real development. It was never about that. I've been working in the emerging markets for 16 years, and I can tell you firsthand, I've never seen 1%, not 1% of what they, not even remotely close to 1% of what these people talk and all of their slogans and everything else materialize on the ground. I mean, this is the most fake industry in the world. I call it the dev fraud industry now, because that's all there is, as Doge has exposed. There's almost nothing of anything else actually happening. There, maybe some charities that are actually doing something. There's some bright little spots here and there, but few and far between. No question about it. They pat themselves on the back if only 55% of the money is going out the back door. I've been in big dev org meetings where they're all like celebrating about this. I couldn't believe my effing eyes when I saw this and heard this, that they would ever, I mean, if you are in actual legitimate business in America and you were talking about that 45% of the money is going out the back door, I mean, somebody would just call the cops in the meeting and the place would get raided by the FBI like that in the next week. But in the dev fraud industry, it's 100% fraud. And no one can point you or steer you to anybody who's doing anything different. They might fake, but they don't want people around talking like this either. They don't want people around. You'll get anybody talking about this. You're out of the groups, you're out of the back channels, you're out of the channels, you're out of the, immediately. They don't, right? They cover up. They're 10 times worse than the shitcoin scammers in like Telegram rooms or whatnot. If anybody who asks a valid question, if they dare take the risk to ask a valid question, I mean, you got the hook out of there faster than the shitcoin criminals, the cyber criminals groups. You will be hooked out of there faster than that. So it's a crazy industry. A lot of people are going to make a lot of money getting involved in venture capital over the next 10 years to 20 years. A lot of money there is to be made as the world is developing. 4 billion people that need every basic service and every business, every product, every goods, everything, every piece of technology that has ever been made. They still need all of this. No one's providing this to them right now, you could say, or certainly not in the standard that it should be. And the profit opportunity, the business opportunity for anybody getting involved is so huge. It is so huge for people to get involved. So we welcome everyone to join with us and start meeting with us regularly. And we'll go through item after item, teaching about this industry and the topics, everything from how to choose quality startups, what are the different features of this, how to build, how to structure a venture capital fund, everything about the market, all of the differences of, let me show another slide here, all of the differences of VC performance, what the different performance is. As an example, here's your VC average performance in this chart here, the internal rate of return, which is your IRR, internal rate of return performance. And this is the vintage years, 2017 to 2022, and your 2024 data. So this is your top 10% of funds over here. Your top 10% of fund performance are earning 16 to 30% internal rate of return per year. 30% per year would be a 13-point-x return over a 10-year period. So 13 to 14 times the money, so better than 10x is a 30%. So the highest side, the highest performers there, as you can see in the top right-hand section, 30 to 31%. So the older the funds, or they have more time to grow, the companies to grow, going back. So 7 years to 8 years ago, those are you're getting a lot of growth. So the top 10% doing quite well. Some of them actually doing better than 10x. But then you have a massive, you have the rest of everybody else, and you start to get down into stock market performance, right? So you have a 11 to 20% in there, close to the top 10%. So in the top 25%, right? And then once you're in the 50%, about halfway, you're getting into 4 to 5 to 7 to 9%. So you're similar to the stock market. So the bottom 50% of VCs actually underperform the stock market. Half of venture capital investors don't even do as good as stocks. So there's a huge gap between the performers and the pretenders. And many of these pretenders, they not only don't perform, but they're way behind the performers and way behind the stock market. You can look at all of the negatives here: minus 12, minus 8, minus 2, right? Minus 1.5, minus 5.8, 4, 3, 8, 4%. So this needs to be analyzed to see why. Why are they doing so bad? What did they do so wrong, right? And you're going to see a lot of wrong there. What are the things causing this? They should be studied, right? Pretenders as well as so, and there's a lot of dogma about what is high performance, and then there's the reality of what is high performance, and both of those need to be separated as well. But what has been kind of really taken over the VC industry is the dogma rather than the actual data is pushed, right? And one of the problems they've said, okay, we're going to fund even more elite people to try to de-risk. And actually, that's where most of the risk was. And we're going to fund later, more late stage, more pile on, more capital into more, fewer bets into more Ponzi scams with more elite establishment people only. And that's where most of the risk actually came from, and where most of the loss actually came from, is these mega consolidation, mega destruction scams that eventuated and are imploding every single day now. So, and it's been proven in the actual data, so instead of the dogma, that the more shots a VC takes. So instead of putting 100 million into one startup, they put $1 million into 100 startups, and then many maybe will fail. Some are mediocre, some are average, some are doing okay, some are doing pretty good, and then some are really taking off. And then because they did 100, they see all of this, what's happening, and then they can raise more money and pile onto the good ones. They take more shots. They have a much better odds of growing out success. It's almost like if you had a garden and you put all your eggs into one basket, and you took like 100 seeds and you put them all into one gigantic hole, and you're hoping for one oak tree that's going to be the biggest oak tree in human history. And that's what you're hoping for. And you put endless, copious amounts of water, endless resources, endless attention into just only one tree. Well, what happens if that tree dies? Your $100 million is dead, right? It's all gone, vaporized, gone zero. Now, wouldn't it be smarter to just, maybe spend a tiny little bit more money on some more land, but actually the land is free in the VC industry. So, and you plant 100 medium trees that are going to get you your top 10 percentile performance. A nice, good-sized apple tree. Maybe it's boring. It's too reliable. We know it's going to profit, right? It's the responsible option, the one that humanity actually needs, that there's actual product market fit for, there's actual TAM there, right? I mean, that's what they talk, but they don't do. So it would make sense to just fund what works. Why reinvent the wheel and be a loser? Why not do what's dependable and reliable, like electricity, breakthrough energy at a lower cost that's completely clean, right? That's very cheap. And you do 100 of these, and you're going to have, of course, some are not going to grow. At 100 trees, 100 seeds that you put out in the pots. Some are not going to grow. Some are going to be little wimpies. Some are going to be medium. Some are going to be really good. And some are going to be really great. And collectively, you're going to have, right, your return. Top decile performance with way more reliability, way more stability, way less stress, way less loss of reputation, and you look fantastic. And you create way more jobs than you would have otherwise. And you don't have these debacles. And that's the direction that the VC needs to go. But we have these top-down societal planners and the big investment banks all fighting against that, and they're demanding more consolidation than ever before to push us into this dystopia. So the only way that we change that is for humanity to fight back, start to use these tools like online social media, come together, build these communities, and work together so that we can build the future of finance that we all deserve, and our parents all deserved as well. and was stolen from them. You know, there used to be a program where any business in America, if you wanted to start a business, you would get a $60,000 grant pretty much to do anything. If you want to take hey, I want to make a restaurant, 60 grand in a grant. Like, they just wanted people to start businesses and create jobs. I mean, what happened to that? That was real capitalism, where you get capital, capitalism, right? There's actually capital for everybody who wants to take a shot. And for every valid based business that's like this, that's a no-brainer that can profit, it shouldn't be too hard to analyze that and see, okay, let's fund that. Let's fund that. Let's fund that. Let's fund. But that's not happening. You know, if you need the money, you're not going to get it. You're only going to get the money when you don't need it anymore, right? People go to the banks, even the SBA. SBA, you need to have $10,000 a month in revenue already. They're not going to touch you. You don't have 10 grand a month in revenue already existing for 2 years already. So you got to build the business completely all by yourself, without any help, without any money, without anything, right? Magic money from the sky that nobody's ever going to get. And only then do you get anything from the SBA, right? Unless you're maybe a Democrat's kid, 13 years old, then hey, there's $10 million for you from the SBA somehow, as Elon Musk found like 1,500 of them. So that's crazy. But so I will finish up my teaching and presentation for today on the AOE BAM Fund, the Businesses Mission Fund, the first ever open venture capital fund in Christian, our early stage, first check, founder, sole founder only fund, funding into the emerging markets, funding sustainable social enterprise for impact in the and we're funding in Cambodian marketplace first, so emerging markets for maximum impact, maximum job creation, and then make a very successful fund. And we can scale this up, and we'll be very liquid. We have many liquidity strategies early for investors. So that will be some of what we'll cover as well, and we'll be on the website as well. So stay tuned, folks, and we will be here Wednesday and Saturday mornings, 10 a.m. Texas time, which is 11 Eastern time, 8 a.m. Pacific time. And I will try our best to get the website completed inside of 1 more week. The social media stuff all completed inside of 1 more week, and then start to aggressively recruit for members everywhere to start to join. And we'll transition from the open discussion meetings regularly and start to build this out. We're involving everybody together to get as much more input and feedback from people, and we'll do networking, business networking as well, which everybody loves. So please help us out with a like, subscribe, share with our social media links down below, and you can screenshot that, send it to whoever. Feel free to contact me anytime as well, or do a Zoom meeting with me as well if you know anybody who might like to get involved. And I've got 7 people so far that are interested to check it out, and I'm sure we'll get many more. How long it'll take us to get to 30, and then collectively as a group, we're going to raise some capital. And there's a bunch of different ways to do that. We'll explore every possible option collectively as a group, as a team, and try to bring in some financial industry people as well. And then we'll start to allocate capital. And very quickly, with what we allocate the capital to, we'll be able to raise a bunch of capital off the back of that. And I have a number of investors that are pretty interested already. After we build that, they're pretty interested to pile on. And I know a number of people to solicit about that. So we just need to build out the beginnings of this. And everybody that contributes, everybody that helps, everybody that puts in some good work into it is going to make money. And they're going to end up with shares in all of these startup companies and shares in a venture capital fund. So if you wanted your only, maybe your only opportunity to get shares in a venture capital fund and shares in a bunch of hot technology startups that are going to 3x to 10x plus, if you wanted that from your efforts, if you don't have the money, here's a chance to join. Maybe you need to do something for your future with how crazy the one-sided, top-down only financing, no trickle-down, situation is currently. So Trump in for 6 months, they just deployed all of their guns for 6 months of their economic and finance plan. I don't know they have anything left, but they have 3.5 years to come up with something. So hopefully they'll finally come up with something now for the small businesses and the rest of America. And hopefully it will not only be the interest rates, pressuring the Fed to down the interest rates. I don't think they're going to get it, folks. I don't think that we're going to get it. I really don't think that we're going to get any rate cuts, maybe for not another year, because the way that they're holding the rate cuts hostage, why the inflation rate is still over 3%. Inflation, goods price inflation, needs to be below 2% in order for them to be inside of their window to cut rates, and they're obviously going to hold that excuse continuously. This is not a Janet Yellen Fed where they want to get the, Janet Yellen was trying to push the unemployment rate down into 2.9, 2.8% before she'd start raising rates. Powell's team is not Janet Yellen's team. This is not what they want to do. They're going to keep rates high, and I think they'll keep rates high as long as it is above 2%. They're not going to touch it. It'd be nice to be wrong, but that's what clearly they put their feet into the sand, in the line, and they're on the. So that's a problem. So we have zero growth, and the mortgage payments are out of control. Nobody can afford a house. So something has to happen. The small businesses need to get financed. Here's your opportunity to get into VC. It's a very tough industry to get into. So please contact me. And that's enough for today. We'll close it on out. Thank you very much. And for our sponsor here, Sam Cheney's Weaponized News California, who's in his program and use his network to broadcast this internationally across all of these different social media platforms that he has built up. Thank you very much for Sam Cheney of California's Weaponized News. So please go to weaponizednews.com. You can buy some of his merchandise there, his wonderful Weaponized News stickers. And Sam Cheney of Weaponized News, he's on here every day, or 5 days a week at least, on California time, 5 p.m. 5 p.m. Pacific, so 8 p.m. Eastern. He is here on all these same channels, broadcasting independent media, interviewing doctors and nurses, whistleblowers, scientists around the world, and many other guests and other independent media hosts, talking about all of these issues that the mainstream media is never going to cover. And a very amazing guy. He's been working on this for 15 years, educating the public on all kinds of things that you'll never get an opportunity to see. And also the only guy I've ever seen actually support the small private breakthrough energy innovators. None of these media ever do it. Never. I've never seen it before. It's been since the 1990s that any of the breakthrough energy innovators were on any of the mainstream television networks, where they had Stanley Meyer with his water car on, or these others. Usually they wait till they're assassinated first before anyone ever talks about them. And then the grift baiters, the clickbaiters, the new narrative media people just use those people to get hundreds of thousands of views, clicks, and likes, talking about the dead ones. But all of the actual alive ones, people like myself, they never do anything to support. And when we reach out to them, they just completely ignore us and they do nothing. They're all totally fake. So they're only interested in promoting themselves, elevating themselves. They're totally selfish, these people. So anybody talking about breakthrough energy, free energy, especially those guys talking about clean energy, breakthrough energy is from aliens. These are fakes. These are like an intelligence agency, fakers, subversionists trying to distract you away from these people. They know that the breakthrough energy innovators are out there. There's many of us, and they've always known about this, and they deliberately are creating a dodge away from these people. That's what those people are for. There's over 4,000 energy innovators that have been seized in America, gag ordered and threatened with 20 plus years in prison, multi-million dollars in fines. This is public record at the U.S. Patent and Trade Office. Over 4,000 been seized, over 6,427 all-purpose technology innovators have been seized. That's public record, not in America. Many more thousands have been seized across the British Commonwealth and European imperialist states and Jewish NATO states. Israel NATO states have many more have been seized, but they don't make that public. And the military has seized many as well that people have come through that track and they block that technology. So I'm very grateful to Sam Chaney for hosting me and sponsoring us to use his platform that he's been building up here. And I appear again on Weaponized News as a co-host Tuesday nights, 5 p.m. Pacific time, covering different news points from Asia, Southeast Asia, technical analysis on molecular engineering in the chemical weapons of mass destruction, miracle shots, covering this as well. All of the details of that. Usually that kind of material cannot air on most of the big establishment censorship industrial complex platforms. That's going to be taken, not aired there because they don't allow the truth on these platforms, as many people know. LinkedIn locked my account out recently. Won't let me back in, demanding my government issued ID. Very creepy, very freaky stuff. Right, ID 2020, real ID, kind of dystopia, evil dystopia stuff. So thank you, Sam Chaney. Thank you to the Weaponized News crowd. Love you back. Hello to all of you in the chat across the different platforms. So I will sign off here for the AOE BAM Fund, Business as a Mission Fund, and Alpha Omega Energy. And we will see you again on Tuesday night on Weaponized News.